In their landmark 1999 Cornell University study, psychologists Dunning and Kruger found that individuals who performed in the bottom 25% on tests of logic and humor consistently and dramatically overestimated their own ability, ranking themselves well above average. This cognitive bias is not a simple quirk of human nature. In the world of finance, it is a multi-trillion-dollar engine of wealth destruction. The most dangerous investor is not the one who knows nothing. It is the one who knows a little and is absolutely certain they know everything. This phenomenon is called the Dunning-Kruger Effect. In the next 10 minutes, you will learn the psychological mechanics of this cognitive flaw, how to identify its four distinct stages in your own investment journey, and discover the specific mental models used by the world's most elite investors to inoculate themselves against it. The Dunning-Kruger effect is a cognitive bias whereby people with low ability in a given domain suffer from an illusory superiority. In simple terms, they are too incompetent to recognize their own incompetence. The very lack of knowledge that leads them to make mistakes also prevents them from seeing those mistakes. This creates a dangerous feedback loop of unearned confidence in any complex field, from chess to surgery to investing. The journey from novice to expert follows a predictable four-stage path of confidence. The graphic from the intro reappears and is built out as the host speaks. The peak of Mount Stupid. This is the beginner. After a brief exposure to a topic, their confidence skyrockets to an irrational high. The Valley of Despair. As they learn more, they begin to grasp the true complexity and nuance of the subject. They are confronted with the vastness of their own ignorance, and their confidence plummets. The slope of enlightenment. This is the long, arduous climb of building genuine competence. As their skill and knowledge systematically increase, their confidence begins to slowly and legitimately rebuild. The plateau of sustainability. This is the expert. They have high ability, but their confidence is tempered by a deep understanding of the risks, the unknowns, and the limits of their own knowledge. Every great investor in history has had to make the treacherous journey through the Valley of Despair. The majority of amateurs, however, build a permanent camp on the peak of Mount Stupid and proceed to light their capital on fire. So, what does this journey look like in the real world of investing, and how can you identify where you are on this map? Let's translate this psychological theory into the practical reality of managing capital. Theory. The four stages of the investor. We can map specific investor behaviors to each stage of the Dunning-Kruger cycle. This creates a clear diagnostic tool. Analogy. The surgeon's path. Think of an investor's development like that of a surgeon. Stage 1. Mount Stupid. You've seen every episode of a popular medical drama. You feel like you have a solid grasp of the terminology and could probably handle a simple appendectomy. This is the investor who has watched a few YouTube videos. Stage 2. Valley of Despair. You arrive for your first day of medical school and are handed a 1,000-page anatomy textbook. The sheer volume of what you don't know is terrifying and humbling. This is the investor after their first market crash. Stage 3. Slope of Enlightenment. Years of methodical study and residency. You practice, learn from mistakes, and slowly build real-world skill under supervision. This is the investor who starts reading annual reports and studying financial history. Stage 4. Plateau of Sustainability. You are now an attending surgeon. You are confident in your high level of skill, but you are also acutely aware that every procedure carries immense risk. You are humble in the face of complexity. This is the veteran investor. Example: the real-world cycle. On Mount Stupid, an investor starts during a bull market. They buy a few popular tech stocks that go up. They mistake luck for genius. They start giving advice to their friends and believe they found a secret. Their investment portfolio becomes dangerously concentrated in a few high-risk bets. They see no need for a financial advisor. After all, they're outperforming them. In the Valley of Despair, the market turns. The high-flying stocks crash. Their secret is revealed to be simple gambling. They lose 50% of their capital and are confronted with the reality that they know nothing about valuation, risk management, or macroeconomics. Most investors quit here. On the slope of enlightenment, the dedicated few begin the real work. They build a diversified portfolio. They focus on their savings rate. They start a serious wealth management plan. They understand that their credit score and personal liabilities are part of their overall financial health. They study the relationship between mortgage rates, inflation, and asset prices. Their decisions become systematic and evidence-based. On the plateau of sustainability, they are now a competent, disciplined investor. They are not trying to predict the market. They are focused on executing their long-term strategy. They understand that real investing is a marathon of managing risk, not a sprint for lottery ticket returns. There are two forces that feed this bias and keep investors trapped on Mount Stupid. Pitfall number one, confusing luck with skill. A bull market is the Dunning-Kruger Effect's natural habitat. When everything is going up, it is easy to believe your choices were brilliant. The inability to perform an honest post-mortem on your decisions, to separate good outcomes from good processes, is the primary fuel for this bias. Pitfalls number two, the social media echo chamber. Modern financial media can create vast digital versions of Mount Stupid. Thousands of overconfident novices congregate in forums and on social media, reinforcing each other's flawed analysis and creating a powerful consensus of incompetence that can lead to speculative manias in meme stocks or cryptocurrencies. Recognizing these traps is the key to navigating the early stages of your journey. But there is a specific mental model that the world's best investors use to inoculate themselves against this bias entirely. The advanced strategy: define your circle of competence. This is a mental model popularized by Warren Buffett and Charlie Munger, and it is the ultimate antidote to the Dunning-Kruger effect. The exercise is simple. Imagine the entire universe of possible investments and businesses. Now, draw a small circle. Inside that circle, you are to list only the businesses, industries, and financial assets that you understand with deep, genuine, expert-level knowledge. You must be able to explain how they make money, what their competitive advantages are, and what a realistic valuation for them would be. For nearly everyone, including professionals, this circle is shockingly small. The rule is brutally simple. You are never, ever allowed to make an investment outside of that circle. This act forces you to confront the limits of your knowledge. It makes the Valley of Despair a safe and productive home base rather than a terrifying pit stop. The goal of a great investor is not to have the biggest circle of competence on earth. The goal is to know precisely where the perimeter of your circle lies, and to have the discipline to never step over it. Your job is not to have an opinion on every stock or every economic event. Your job is to wait patiently for opportunities that fall squarely within your small area of true expertise. This single practice dissolves unearned confidence and replaces it with earned, justifiable conviction. Let's distill this psychological deep dive into 3 actionable principles. Recognize the bias. The Dunning-Kruger effect dictates that incompetence masks the awareness of incompetence. In investing, this leads to a fatal combination of high confidence and low skill. Know your location. Your journey as an investor will likely follow the 4 stages: the peak of Mount Stupid, the Valley of Despair, the slope of enlightenment, and the plateau of sustainability. Honestly, identifying your current stage is the first step toward progress. Build your circle. The ultimate defense is the circle of competence. Define what you truly know with brutal honesty and have the discipline to ignore everything else. Your long-term success will be determined not by your brilliance, but by your humility. The market is a relentless machine for transferring wealth from the confident to the competent. Ensure you are on the right side of that transfer. If this analysis provided you with real value, invest a single click in the subscribe button to get daily access to the Codex. Knowledge is the new capital. We'll see you tomorrow.